Hello, good morning, ladies and gentlemen. How are we all doing today? And trust you are doing well. I'm so grateful to be with you guys today, and I hope we are getting prepared for the New York session today. So if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that we can get things started here. So let's confirm that we are good to go. Can you see my screen? If you can, let me know in the comment section by typing hi. So I'm trying to load up my comment section. Please give me a moment. Let me see so that I can relate with you guys. Let's see what we have here. Okay, so let's see some comments, please. Okay, I can see Genry, thank you very much. 3025 549 2064 756, thank you very much. A carry, thank you very much. Al Raja, all right, thank you very much, guys. So with a handful of comments here, I will take this as a positive feedback that we are good to go this morning. And on this note, I welcome you all to yet another promising session on the X Trend Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, where we shall be diving into the financial market using technical parameters to identify trading opportunities lining up for us today. So we are going to be reviewing market structures, examining price patterns, market behaviors, recurring trends, support and resistance levels to gain an insight into the current market structures of the currencies that we've been monitoring. And by the end of the session, you would have digested data that will help you eventually make an informed but independent decision during the New York session today. And on this note, I also want to welcome the newcomers in the house. For those who have joined us for the first time, you are highly welcome. And what we simply do here is to gather here as a community, getting ourselves prepared for the New York session by reviewing our existing trades. So we have a handful of financial instruments that we have chosen at the beginning of the week, and we've been monitoring this instrument through the course of the week. So this is what we simply do here 10 a.m. UTC on a daily basis. So if you are joining us for the first time, try stay tuned in, and with time you will get to understand how this works, and you will be able to use the information you have gathered here to make your independent decision on your account. So on this note, let's dive right into the business for today. So, and as usual, you know how we do it. The first thing we want to be doing here is to keep tabs with the fundamentals, and by looking at the economic calendar to see if we do have any high impact macroeconomic events to look out for today. And from what we have here on the economic calendar for Wednesday, May 31, we do not have any high impact events that will be affecting the currencies that we are monitoring for the week. So with that being said, we are going to be going right into the chart and then use our technical skills to manage our existing position and also look out for more opportunities from the pairs we have been monitoring. So the first thing we did this week was on the US oil spot, and in fact we have a tremendous profit running on the US spot since Monday morning here. So since Monday morning we have been selling this commodity, and in fact since the moment we sold at below the $73 area, price action has moved over 470 pips in our favor, which is quite a very good start to the week on the US All Spot. So we are going to be running through what's led into that decision we made and how we are going to be taking advantage of any opportunity during the New York session today. So let's run through the 4 hours time frame. Let's look at what we saw on this chart at the beginning of the week. So here we are on the 4 hours time frame, and the first thing we observed on the 4 hours time frame is the fact that price action has been bearish on this chart. And when we take into consideration the lower highs after connecting it together, we have a bearish trend line which we have been using to guide our trading activity in this market. Now, since the beginning of this month, we saw how price action was initially choppy, caught within a range between the $74 area and the $71 area, which lasted about 3 weeks in this market. But one important thing we saw here was the fact that buyers were trying to break out of this structure. So we saw higher lows where price action consistently found higher lows, and it was at this point we were thinking that a bullish momentum will continue after we cited the breakout of this bearish trend line here during the course of last week's trading session. But from the look of things right here, we can see that price action has been dropping to the downside, and in fact it broke down that bullish trend line significantly to the downside from that point. So at the beginning of the week here, this is what we saw. We had a key level at the $73 area, and you know how we use our key level. Whenever price action remains above the key level, we look out for buying opportunity. But if price action drops below our key level, and definitely we have no other choice than to start looking out for selling opportunity. So our center of focus at the beginning of the week was just simply around that $73 area, where we wanted to see how participants in the market will be reacting to that structure to give us an insight into where price action is likely going to be going for the week. And in order for us to have a better perspective into what is going on around our key level, we scale down into the 1 hour time frame. Now, if I zoom into the 1 hour time frame here, this is what we saw at the beginning of the week. We saw this choppy situation where price action was initially ranging between the $73.55 level and the $73.05 area to give us a flat channel to work with. And you know how we do it. Whenever we have this kind of flat channel, we want to remain patient, waiting for price action to either break out of the resistance line for buying opportunity or break down the support line for selling opportunities. And the support line was what we saw that was broken at the beginning of the week, and during our live session on Monday we acknowledged this, and I told us all that for those who had missed out from this bearish momentum that broke down that support line, that we want to remain patient, waiting for structures, new structures to mature, which is likely going to be coming in the form of a retest of the level that was broken before another wave of bearish momentum will happen, which is exactly what happened here. We saw our price action broke down, came back to retest the zone here to give us that opportunity to sell the US All Spot. And since then, we have been adding more sell position to our existing trade. As you can see here, we added more position at the breakdown retest of the $72.30, breakdown of the $71.80 area, and also the breakdown of the $71 level also welcomed more opportunities. So on the US oil spot so far this week, we are roughly running into about 1,000 pips if we consider the multiple entries we have on this chart. So for those who had been part of this momentum since the beginning of the week, well done to you for being on standby to catch this opportunity. And if you still have a sell position running at this particular point in time, well done to you. And secondly, what you definitely want to be doing right now is to move all your stop losses on all the current positions to secure the current position. And the most appropriate area, I think, that we can move our stop loss to at this point is anywhere right above the $69 area, so that we can give price action some room to breathe, with the hopes that price action might still continue to the downside. So after our position has been secured right now, what is our next line of action on the US oil spot for today? Well, after monitoring price action this morning, this was what I was able to spot here. After seeing that impulsive bearish move to the downside, we saw that as soon as price action got into that $69 area, during the later part of the New York session yesterday, we saw how buying pressure resumed around that area, negating all attempt by the sellers to break down that structure. And this rejection here evolved into a flat channel where price action was ranging between the $69 level and the $69.80 area to give us a flat channel. And you know how we do it. Whenever we have this kind of simple flat channel, we want to wait patiently for the structure to give us a signal in the form of either a breakout of the structure for an opportunity to buy, or a breakdown of the $69 area for an opportunity to sell. And with what we had here, I had a sell stop order below the $69 area, and since this morning I have about how many pips in profit right now from this point? About 85 pips in profit. And for those who took advantage of this opportunity, well done to you for being on standby to catch that move. And for those who had missed out on this opportunity, well, let's look at this current structure and see how we could join or add more position to our existing trade. So the first thing we are going to be doing here right now is to observe. Hold on a second, please. I want to, okay. Sorry. Okay, so what we are going to, our center of focus for today is going to be around this structure we identified during the early hours of today. So now that we have a breakdown of the support line here at the $69 area, and if you had missed out on this opportunity, well, we have no other choice than to remain patient here to wait for new structures to mature. And one of the potential that could happen here is price action retracing back into the structure to incite another wave of bearish momentum to the downside. And one way we are also going to be, we also have a structure here that we are going to be using to also help us to monitor this retracement phase, and that is the trend line here. And what I did here was to connect a series of lower highs since the later part of the New York session yesterday to give me a trend line to work with. So if price action comes into the structure, which also shares a confluence with that $69 level, then we want to be looking out for selling pressure around that area to help us to identify another opportunity to join, and if you're already in this position, to add more position to our existing trade. So that is how we are going to be selling here. So if you had missed out on the breakdown, you don't want to jump into a moving trend right now, as price action is way out of the current structure. So let's wait for some new structures to mature for us to join any move. So this is one of the structures here. We want to see price retest the structure to give us an opportunity to sell. Then another thing that could happen here is this impulsive move could evolve into a choppy situation where price action will give us a probably a bearish rectangular pattern, where the breakdown of the support line will give us an opportunity to add more position to our existing trade. So these are the things we are going to be looking at to sell the US oil spot for today. Then another thing I would like us to always look at, despite the fact that we have a sell bias in this market, there is a chance that buyers too can come in. And what do we want to see on this chart that will make us to feel comfortable buying the US All Spot? But before I talk about the bullish expectation here, it is very important that we take note that this is a very long bearish momentum which started this week, and since price action has moved over 450 pips in this direction, you will agree with me that the momentum here for the bearish is very, very strong. And if a bullish expectation comes in here, it will be considered to be a retracement of the previous impulse leg. So if a bullish momentum happens, what do we want to see here to buy? Well, for me at this point, I would rather see price action break out of this trend line to the upside to start thinking of joining a counter trend opportunity, which I will say might be a retracement of the impulsive move. And look at what happened at the during the New York session yesterday. We saw how price action broke down that $71 level, a very important buying niche in this market in the last couple of weeks. And we might likely see a situation where price will come back to retest that structure to incite another wave to the downside. So if we are going to be buying, I want to see price action break above the trend line, right above that key level at the $69 area. And one important pattern we want to see that will give us a confirmation to join a bullish move is price action retesting the structure and buying pressure resumes right above that structure in our lower time frame to give us an opportunity to buy. And mind you, when you are buying at this point, this is a counter trend opportunity. So what this simply means is that when price action moves in our favor, we want to look out for key structures that will help us to move our stop loss to secure positions accordingly as we continue to monitor price action into that $71 area. But I doubt if this is going to happen. But if it does happen, we want to also take advantage of that opportunity. But things are still looking very bearish here. So we still have a spot stop around the $69 area where we want to be looking out for selling opportunity if price action ever comes into that area to retest it. But if a breakout happens by pressure around that level, then we might get ready for a counter trend opportunity. So these are my views here on the US All Spot for today. You might want to screenshot my screen so that you can use it as a reference point when you're about to make your independent decision on this commodity. If you have any questions whatsoever, let me know in the comment section. So that is that on the US All Spot. So I will be moving on to the next pair right now. And the next pair we are going to be looking at is the USTech100. Hold on a second. Sorry. So what do we have here on the USTech100? So let's run through the higher time frame first of all. Let's look at things from an holistic point of view to see how price action has been playing out on a long-term perspective. And at the same time, this will also help us to have a background knowledge of what we were looking out for at the beginning of the week. So going up into the 4 hours time frame, so this is what we saw at the beginning of the week. And one thing we acknowledge here is that since the beginning of this month, price action has been on a bullish side. And to further emphasize the strength of the buyers in this market, we were able to connect a series of higher highs and higher lows to give us this ascending channel you can see on your screen right now. And with this ascending channel we have here, it is quite obvious that price action has been bullish. However, something interesting happened during the course of last week's trading session as we saw price action broke out of a significant supply zone at the 13,900, which finally led into the breakout of the resistant line of that descent of the ascending channel to incite a strong bullish momentum to the upside. Now, when we zoom into the current structure here, since the beginning of this week, you will see that as soon as price action got into the structure, we have been witnessing a choppy situation, and this is a clear sign that buyers are finding it difficult to continue with that momentum, and there is a high chance that sellers could come in at any point in time. And if you look at this old impulsive move that started from the support line of this ascending channel, you will agree with me that a retracement phase at this juncture seems long overdue. And for those from a psychological perspective, majority who had bought the USTech100 at a cheap price, let's say around the 13,500 level, will at one point in time want to be doing some profit taking activities, and this might likely reflect on the chart as a retracement of that impulsive move before another wave of bullish momentum will happen. And with the situation of things since the beginning of the week, it appears that sellers could come in at any point in time. And this whole structure we have here is looking more like a reversal pattern, and if this happens, we might likely be seeing a sell-off, which I will be calling a retracement phase. Now the question right now is, how far will this retracement phase go if it finally gets confirmed? So we are going to be getting into the details on that one, but what I want to do here is to acknowledge the neckline which we are going to be using to guide this bearish expectation in this market. So we have the 14,300 level, which I want to spot around this area, which we are going to be using to guide our trading activity going forward. So we have the 14,300. Let's label this area for the sake of clarity. So we have 14,300 level. So I placed it at the bottom of my screen here. And then what we are going to be looking out for to sell is if price action breaks down, retests the structure, then we could join the bearish move to the downside. Now the second question, where will this retracement phase go before we start looking out for buying opportunity? Well, to get that one sorted, we want to be using our Fibonacci retracement tool, run it through the previous impulse leg, and aim at an area between the 50 and the 78.6% of the previous impulse leg. So if we do that correctly, we should be having somewhere within the $14,000 area and the 13,750 as an area to project where our potential TP target zone will be for the sellers. So TP target for sellers, let me place this right here. TP target for sellers, and then we have this area also serving as a potential demand zone if we start seeing buy pressure resume from that level. So I will be placing this right inside the box, and then I'll give this a yellow color. Here we go. So we are going to be having our TP target for any sell position if price action breaks down the 14,300 to the downside. Look out for selling opportunities and have our TP target between the 14,000 area and the 13,750 level, which will be dovetailing to a minimum of about 280 pips to a maximum of about 570 pips to catch here if price action moves in that direction. So this is what we are going to be looking out for to sell the USTech100. Now there is a caveat to this whole structure here, that is, if price action drops to the downside and continues, as soon as price action gets into the resistant line of that ascending channel, remember this level was broken to the upside last week. If price action comes back into that structure, we want to be moving all stop losses for sell positions to secure the current position, as we want to see how price action will be reacting to the resistant line of this ascending channel to determine if we are going to be adding more sell position to our existing trade, or get ready for another wave of bullish momentum. So if price action drops below the resistance line of that descending channel, then we are back within sellers territory. Then we are looking forward to price action coming back into the support line of that ascending channel for our take profit. But if it so happens that as soon as price gets into the trend line and we begin to see buy pressure resume around that area, then we are likely going to be getting ready for another wave of bullish momentum. And if we look at this from a technical standpoint, when price broke out of the resistance line here, we expect that at one point in time price is likely going to come back, retest that structure to incite another wave of bullish momentum. So you would agree with me that the resistance line of that ascending channel is an area we want to look at if price action drops below the 14,300. So whatever happens here will determine if we are going to be adding more sell position or getting ready for another wave of bullish momentum. So let's keep this in mind while we continue to monitor price action from this level. So the level we are going to be using today to guide our trading activity is that area around the 14,300 level. So let's scale down a little bit into the 1 hour time frame. Let's see what is really going on there and how we intend to and how we have been trading the USTech100 since Monday. So here we are on the 1 hour time frame, and this is the 14,300 level which we identified earlier. So we want to also use that as a yardstick to guide trading activity today. So since the beginning of this week, we had a flat channel where price action was ranging between the $14,415 level and the $14,350 area. So this was the channel where price action was consolidating at the beginning of the week. And what you know how we do it whenever we have a flat channel, we want to see price action either break out of the resistance line for an opportunity to buy or break down the support line for an opportunity to sell. And with the situation we had here on Tuesday yesterday, we saw the breakout of the structure. Price action moved in our favor. I think it moved about over 100 pips before this wholesale position began, and I do hope you moved your stop losses accordingly to secure your position, as you know how we do it here. When price action moves significantly well in our favor, we move our stop losses to lock in some profit while we wait out for more opportunities. And look at what happened here. We saw price action continue to the downside to trigger our sell stop order below the 14,350, and since then we have been in a sell position. So price action is currently trading below the support line of that flat channel we identified at the beginning of the week, giving us about how many pips in profit right now? About 30 pips in profit right now. Let's see how far this momentum will go. And for those who took advantage of the sell position, of course you want to be moving your stop loss right now, and anywhere around or above the 14,350 seems most appropriate to lock in this position, and let's wait out to see how far this bearish momentum will go. And remember, we identified the 14,300 level on our 4 hours time frame, where we said a breakdown retest of the structure will definitely be giving us more opportunity to sell the USTech100. So let's be on standby for this one so that we can catch this potential opportunity from this current structure. So you might want to screenshot my screen so that you can use it as a reference point when you're about to make your independent decision. So if you have any questions regarding what I just explained, feel free to let me know in the comment section, and trust me, I am willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to read through the chat and see if there are any comments or questions for me before we move on to the next pair. Okay, so I can see 6422 wants us to treat XAGUSD. Well, let's see how that will work out. We don't have XAGUSD on our watch list for this week, but if we can run through all the instruments on our watch list before time, I will try to do something on the XAGUSD. Okay. All right. Hey Mia Gigi, good morning to you. It's been a while since I saw you. Trust you are doing well. Okay, it's been a long time. I could watch you as the hour change. It's lunchtime here. All right. Hope you are fine and your little one too. Oh, we are all fine. Thank you very, very much, Mia Gigi. And glad to have you around too as well. I hope you're having fun. And I hope you're enjoying your lunch too as well. All right. Glad to hear from you, Mia Gigi. Thank you very much. Okay, so Dino, thanks. Okay, you're welcome, Dino. 950, good morning to you. How are you doing today? 603, thank you very much. Zach, all right, thank you. I see your comment. All right, so in the absence of no questions, I want to assume that we are on the same page here. So in that regard, I will be moving on to the next pair. So the next pair we are going to be treating this morning is the GBPUSD. And on the GBPUSD, we have a profitable position so far this week on this pair, though we have been taken out of that position. Remember, we spotted the opportunity to buy the GBPUSD if price action breaks out of the 1.23580 right here, and we agreed that a breakout of that structure would also have broken out of the trend line we identified on the 4 hours time frame. So let me quickly show you that trend line on the 4 hours time frame for those who are not part of the live session yesterday, so that we can all be on the same page. So this is the 4 hours time frame on the GBPUSD, and this was exactly what we were able to come up with at the beginning of the week. So the first thing you will see here on the GBPUSD is the fact that price action has been bearish in this market, and to emphasize the strength of the sellers, we were able to connect the series of lower highs to give us this beautiful bearish trend line you have on your screen. And in fact, this trend line has been guiding our bearish buyers in this market since the beginning of this month. But something interesting happened yesterday while we were monitoring price action. As you can see here, we saw price action break out of this trend line for the first time in the last couple of weeks, and this is quite a good signal that we might likely be seeing a reversal pattern unfold before our highs. And remember, yesterday we acknowledged that the potential of a reversal pattern cannot be ignored from this current structure. And what we saw here was, after the impulsive move into the 1.231 area, we saw how price came back into the 1.23750, and we saw how sellers found it difficult to break down the previous low, hereby giving us a higher low and giving us a situation here where price action could transition into a double bottom structure, which from a technical standpoint is a very strong reversal pattern. And what made this whole pattern more interesting is the fact that the neckline of this double bottom structure also shared a confluence with the bearish trend line we identified earlier. And one thing we said here yesterday is that if it so happens that price action breaks out of the neckline, then we also have a breakout of the trend line too as well, which will be a good sign that the trend line may no longer have the capacity to continue to negate the bullish attempts in this market. And you can see what happened yesterday. We had our buy position triggered, price action moved over 90 pips in our favor before this old bearish momentum began. And I do hope you moved your stop loss accordingly to lock in your profit. You know how we do it here. Whenever price action moves significantly well in our favor, we want to be moving our stop losses to secure the current position, so that at least if price action moves against us, we would have something to count on as our experience in that position. And as you can see here, we have been taking out on all buy position in this market. And right now we are at a critical point in the market where anything could actually happen. But from the look of things, I'm still thinking that a bullish expectation is still very possible in this market. And why have I thought so? Now, if you look at the structure closely, we saw the breakout of the trend line here, which also shares a confluence with our key level, the neckline of that reversal pattern. And you all know from a technical standpoint that whenever price action breaks out of a key structure like this, we expect that at one point in time, price is likely going to come back to retest that structure to anticipate another wave of bullish momentum. And if you look at what has been happening in this market in the last couple of hours, you will see that price action is gradually approaching that trend line, which might turn out to be a retest of that structure to incite another wave of bullish momentum. So it is clear at this point that we are at a critical point in the market. That area between the 1.23750 and that area at our key level at the beginning of the week, which is situated at the 1.23400 area. So there is a chance that we could have some choppy situation go on within this area before that breakout of the 1.23750 happens to trigger another opportunity to join the trend continuation to the upside. So let's talk about the potentials that the buyers have here to be part of a bullish move. So what we are going to be looking at during the New York session today is to see price action transition into a reversal pattern around this area. It could be a double bottom structure, something like this, or a head and shoulder pattern, rise, falling wedge, whichever case it may be. Identify your neckline, then buy at the breakout retest of the structure to join the momentum to the upside. In fact, personally, I already have a buy stop order above the 1.23750, waiting for this old reversal pattern to mature and then have my buy stop order triggered if I'm not on the screen. So this is what we are going to be looking out for to buy the GBPUSD. So we might even see price action drop into the structure breakdown, do a sharp rejection, sharp retest of the trend line to now incite the move to the upside. So these are scenarios we are going to be taking into consideration during the New York session today. So in as much as we're looking out for buying opportunity from this current structure, there is also a chance that sellers could come in as well. And considering the fact that price action has been bearish since the beginning of this month, we should not ignore the potentials the seller have in this market too as well. So if we are going to be joining a sell momentum from this current structure, what do we want to see on this chart that will make us change our bias from bullish to bearish? Well, remember we have our key level at the 1.23400 level at the beginning of the week, and you know how we use our key level. When price action remains above the key level, we want to look out for buying opportunity. And of course, if price action drops below the key level, we want to look out for structures that will pronounce an opportunity to sell. So if we are going to be selling from this current structure, I want to see price action break down that key level, of course. But when the breakdown happens, we don't want to get too excited, you know. We want to wait for confirmations to happen before we join the bearish move. And one thing I also want to acknowledge here is the fact that the bearish trend line, which we identified at the beginning of the week, which has been supporting this bearish momentum, also shares a confluence with that key level. So if a breakdown of the key level happens, price would have also broken down the trend line, which will affirm that price action is back within the seller's territory. And one thing I want to see here that will give me a confirmation that we are going to be getting ready to sell is to see price action do some retest of structure, continue selling pressure below this area for me to join a bearish move to the downside. And if it so happens that price action goes on to break down the 1.23100 level, then we shall be looking out for more opportunity to sell. Well, I doubt if this sell expectation will happen in this market based on the structures we have been witnessing here since last week Thursday. But if it also happens that price action breaks down that structure, definitely we want to be on standby to catch that opportunity. But I'm still leaning towards a bullish momentum here, that is price breaking back above the 1.23750 to incite the second wave of the bullish momentum that started yesterday. So let's see what happens. Patience is required at this juncture, as we want to see how price action will be trading in the next couple of hours around this area to decide what our next line of action will be. Now, before I close on the GBPUSD, I also want us to scale down into the lower time frame to see what is really going on around this area at the 1.23500 area, a very strong psychological level. Is it that we are seeing buy pressure resume? Can we cite a double bottom structure or a head and shoulder pattern around that area to give us an insight into the potential that buyers could likely break out of the 1.23750? So in that regard, we shall be scaling down into the 1 hour time frame right now. And I just saw something right now which I also want us to look at, and this is this trend line here. So I want to readjust this trend line. Remember, we had a trend line here which has been supporting a bullish momentum since last week Thursday. So I want to readjust it so that I can capture these higher lows here, and I think if we bring back our candle chart, it will capture the higher lows around these areas too as well. So let's bring back our candle chart, and you can see what we have. You see we have a uniform ascending channel. So this trend line here is going to be one of our yardstick to guide trading activity today. So what this simply means from this juncture is that as long as price action remains above that trend line, we want to look out for setups that will support a bullish momentum from this structure. So let's see what happens going forward from this current structure. So I said here we are going to the 1 hour time frame to see if we could have a reversal pattern around that area. Now, looking at what we have here, remember that our resistant line for this week was at the 1.23580. If you had been with us since the beginning of the week, you would remember that we had a flat channel at the beginning of the week where price action was ranging between that resistant line at the 1.23580 and the key level, which was our support line for the week, at the 1.23400 area. And with the breakout of that resistant line here, which also shares a confluence with the bearish trend line that we identified on the 4 hours time frame, this was yesterday. You know, from a technical standpoint, when price breaks out of a key significant structure, we expect it to come back and retest that structure around that area. Now look at what is happening here. That 1.23580 also shares a beautiful confluence with that bullish trend line. And also we have something that's looking like a retest of that structure with a high chance that a trend continuation to the upside could kickstart anytime from now. So we want to be able to be part of this move if that is going to be the case. And like I told you earlier, I already have a buy stop order above the 1.23750 to capture that move if price action continues to the upside here. But from what we have at the retest of this structure here, I'm yet to see any reversal pattern on the 1 hour time frame at this point. So we still need some time for price action to mature around this area to give us an insight into the potentials of the buyers from this structure. And let's see the 15 minutes time frame to see if we could actually see any structure that will support a trend continuation. Okay, so this is the 15 minutes time frame here, and it appears we are seeing something like a reversal pattern here. So if we consider the impulsive move that brought us to this point, so hold on a second, let me go back to the 1 hour time frame. I want this 15 minutes time frame to look very, very neat, so that we don't get things confused. So I want to remove all these ones and leave, okay, I want to remove this one too as well, so that we can have a clean chart on the 15 minutes time frame. so that we can have a better perspective. So let's go back to the 15 minutes time frame now. I think we should have something clean. All right. So remember this level, the 1.23750, where I told you I have a buy stop order above that structure. And this is our key level at the 1.23400 area, remember? And price action is trading above our key level. And you know, when price action trades above our key level, we want to be looking out for buying opportunity here. Now, if we consider the impulsive move that brought us into the 1.235 area, you will see that we have a situation here. After price tested the 1.23480, we saw price come back into the 1.237. We saw price was unable to break the previous low, hereby giving us a higher low, and it appears price action is gradually transitioning into a potential reversal pattern. And you know how we do it. Whenever we spot the possibility that price action could evolve into a reversal pattern, the next thing we want to be doing is to identify the neckline of that reversal pattern. And if we do that correctly, we should be having an area around that psychological level at the 1.23700 area. So I would like to give this a pink color, and then let's label it for the sake of clarity. So we have the 1.23700 area, which will definitely be serving as our neckline for that reversal pattern we have here. And a breakout of this neckline will also validate the potency of that double bottom structure we have here. So what we are going to be looking out for to validate this is for price action to break out, retest the structure to give us an opportunity to be part of a bullish move. And if it so happens that happens, we want to have a buy stop order. We already have a buy stop order above the 1.23750, which will have been triggered. A stop loss, we could have a stop loss of about 20 pips. Stop loss is quite okay from this current structure, and let's see how far this is going to go. I'm thinking that we are going bullish on the GBPUSD today, and let's see how things plays out from this current structure. And remember what I told you on the 4 hours time frame, that we are not going to be selling unless we have a breakdown of our key level at the 1.23400 area. So let's see how this plays out in the next couple of hours, and I hope that you'll be on standby to catch this opportunity when they finally happen. So let's see what happens while we continue to monitor price actions. Screenshot my screen if you want to, so that you can be able to use it as a reference point when you're about to make your independent decision on this instrument. So I will be moving on right now. If you have any questions whatsoever, in the let me know in the comment section. Okay, I see your comment, Mia Gigi. Glad to know you are great, and thank you very much for your concern. Shockwave, good morning to you. 2847, hello, how are you doing? And trust you are doing well today. So in the absence of no question, let's move on to the last pair for today, I think. Yes, I think that was the last pair for today, USDJPY. So if we can finish this in time, then we could take on the XAGUSD, which was introduced to us by what's his name again? Let me see. Okay, 6422. Is 6422 still in the house? If you are still in the house, let me know in the comment section so that I know that we can still treat the XAGUSD. So here we are on the USDJPY for this week, and this is the 1 hour time frame. And so far so good this week. We have been selling the USDJPY. So let's quickly run through what we saw at the beginning of the week that gave us the idea of selling at that point. Now, if you look at the 4 hours time frame, we saw a simple ascending channel which we were supposed to be using to guide our trading activity for this week. So after connecting the series of higher highs and higher lows, we have an ascending channel to work with for this week. And the next thing one will be thinking, the natural thinking process with this kind of structure is to start looking out for opportunities to buy the USDJPY. But something interesting was observed during our live session yesterday, I think at the beginning of the week, when we zoomed into the current structure. And what we saw here was that as soon as price action tested the 140.750, which happens to be our key level for this week, we saw a sharp rejection of that areas by the sellers, giving us a clue that sellers are present around that area to negate any bullish attempt. And one more interesting thing about the structure is the fact that it also shares a confluence with the resistance line of that ascending channel, which is giving us an idea that price action might likely respect the resistance line like it has always been doing to incite a move back into the support line to probably push a trend continuation to the upside. So that was the first sign we saw at the beginning of the week. And then during the early hours of yesterday, we also saw another sharp rejection of the 140.750, and in fact this time around we saw a shooting star candle, which from a technical standpoint is a sign that reveals the presence of sellers in this market. And as a result of this new development here, yesterday we projected that we are going to be looking out for selling opportunities if price action breaks down, retest the 140.00 area. And this was exactly what happened during the New York session yesterday. And in fact, price action moved about 50 pips in our favor before we saw this buy pressure resume here, taking us out of our positions with a small profit, or at a worst case scenario, break even if you had moved your stop loss to break even. Now, with the current situation we have here, it is quite interesting that buying pressure is gradually being observed between that 140.00 area and the 139.700. And as you can see here, since last week Thursday, you can see that every attempt by the sellers to break down the structure here has been met with strong resistance from the buyers. And since in fact in the last 24 hours here, you will see how the nature of the wick of this candle has been. And in fact, we even have multiple hammer candles around this area, hereby revealing how present the buyers are from this current structure. And with this kind of situation, we cannot ignore the potential that buyers could likely take us out of the structure. So what we are going to be doing here is to see how we want to position ourselves to capture this move if buyers will finally break out of this zone. So in order to buy the USDJPY for today, we want to see price action break back above the 140.00 area, scale down into our lower time frame to look out for a retest of structure, which will further give us a confirmation of joining a bullish momentum. And if it so happens that price action breaks out of the 140.750, we'll definitely want to be looking out for more opportunities to add more position to our existing trade. So from this current structure here, we are going to be looking out for buying opportunity at the breakout retest of the 140.00 level. So that is what we are going to be seeing here to buy the USDJPY. Now, in as much as we're looking out for buying opportunity from this current structure, you know how we do it here. We want to ensure that we keep tabs with the opposite direction too as well. The potential of sellers at this point also cannot be ignored. And if we consider what has been happening here since the beginning of the week, like the retest of the 140.750, that was right there on Monday. We saw another rejection here again yesterday. It's a sign that seller still has some level of opportunities here to push price to the downside. And now if we zoom out of the structure and take into consideration the impulsive move that brought us into this choppy situation, you will see how price action is gradually transitioning into something that looks like a reversal pattern in the form of a head and shoulder. Now, if you look at this closely, you will see the left shoulder here, and it appears we have a head here, and the right shoulder still going through a transition phase, which is not yet confirmed right now. And if we do have this kind of setup, then the neckline at the 139.700 area will be serving as a platform that will be validating this reversal pattern if we see a breakdown of the structure. So for this reversal pattern that we just identified here to be mature, we want to see price action break down, retest the 139.700, after which we want to be selling the USDJPY for today. And there is a caveat to the sell expectation here, and that is the support line of this ascending channel. Let me zoom out so that you can see things clearly here. So this is the support line of the ascending channel. So we want to see if price action drops and continues into the support line here, we want to see how price action will be reacting to this level, as depending on how price action reacts to this level will determine if we are going to be adding more sell position to our existing trade or get ready to join the trend continuation to the upside. So if it so happens that price action continue to find buy pressure above the structure, and we start seeing structures like double bottom structure on our lower time frame right around that support line, then we have no other choice than to anticipate a trend continuation to the upside. But if it happens that price action breaks down the support line, retest of structure will definitely be giving us an opportunity to sell the USDJPY for today. So these are the things we are going to be looking at from this current structure. So I hope that you mark this out on your chart, and you might as well screenshot my screen so that you can use it as a reference point to guide your trading activity today. So you would agree with me that our center of focus for today is within the 140.00 area and the 139.700 level, which has been where price action has been ranging in the last 24 hours. So let's see how price action reacts to the structure, and definitely we shall be looking out for an opportunity from this level. I see your comment 2847. Thank you very much. I greet you too. I'm glad to have you around. So that is my view here on the USDJPY. If you do have any questions whatsoever, feel free to let me know in the comment section. Now let's go into the XAGUSD. I will just run through this. I think I have a setup on the XAGUSD which I'm also monitoring. So let me quickly share this with you as a gift, let me say, as a parting note. So we have the XAGUSD here, and this is what I saw on the 4 hours time frame, and I would like you mark this out on your screen, on your chart, so that we can use this as a reference point to guide trading activity. So what I saw here on the XAGUSD is quite interesting. I was able to identify a simple reversal pattern here in the form of an inverse head and shoulder pattern. And from what we have here, you will see that price action is currently trading around the neckline of this reversal pattern that you can see here. So what I'm doing here, what I'm going to be doing here is to position myself to capture a bullish move. So following the impulsive move here, we saw the left shoulder, we saw the head, we saw the right shoulder, and price is back within the neckline of that area. And in the last 24 hours, price action has been ranging just right around that structure. So this for me is a clear sign that we are at a critical point where anything could actually happen. And if we scale down into the 1 hour time frame along this area, we begin to see some things. This morning we saw price action break out of the neckline a little bit. So let me label this neckline area for the sake of my viewers. So we have $23, what should I call it? $23.50, or let's call it $23.24. Let me call it $23.24 here. So we have the $23.24 level marked out on your screen right now. So this is where above this levels where we want to be buying the XAGUSD today. So we already saw a breakout of the structure, which I was part of this morning, and price action appeared to have come back to retest the structure. So continued buy pressure above this area is quite suitable for us to look out for buying opportunity above that level. So above the $23.24 level is where we are going to be looking out for buying opportunity whatsoever in this market. Then we have the privilege of adding more positions to our existing trade if price action breaks out, retest the $23.40 area, which falls somewhere around this level. So let's label this area for the sake of clarity so that when you screenshot my screen, you can be able to use it as a reference point when you're about to make your independent decision. So I want to see a breakout retest of the $23.40 level to give me more opportunities to add more position to my existing trade here. Now, in as much as we're looking out for buying opportunities above the $23.24 level, we cannot ignore the potentials that the sellers have in this market. And if we are going to be taking advantage of a bearish move from this point, what do we want to see on this chart that will give us the sign that sellers are gradually gaining momentum? Well, the first thing I'm going to be doing here is to acknowledge this bullish outlook, that is higher lows on this chart, and we are going to be using that trend line to support any potential bullish momentum in this market. So as long as price action remains above that trend line we just identified now, we shall feel comfortable in our buy position. So price might likely do some choppy situations around here, but as long as it remains above our trend line, we'll feel comfortable buying and look out for more opportunities to add more position to our existing trade. But however, if price action at any point in time during the New York session today breaks down this trend line, then at this point we want to be considering selling the XAGUSD. At this point, we want to be negating any bullish buyers in this market. But one thing here is that we are not going to be jumping into any conclusions, as we still need a further confirmation to validate that sellers are gradually gaining momentum. And what we want to be doing as soon as we sight the breakdown of the trend line is to scale down into our lower time frame to look out for retest of this trend line that was broken, to give us an insight into how sellers are gradually gaining momentum so that we can join that move to the downside. And if this happens, then any reversal pattern below that structure will be welcoming the buy position here. And to make things more easy, let us have a line, a support level or a resistance level that we can use to guide any bearish move in this market. So I will be giving this one a blue color. So we have the $23.15 level, where a breakdown retest of the structure will definitely be giving us an opportunity to sell the the XAGUSD today. So let's see how this plays out. So we have the $23.15 level, breakdown retest, lines up exactly with the bullish trend line. If price continues to find selling pressure below that structure, we look out for more opportunity to sell. So this is how we are going to be trading the XAGUSD today. I hope I made myself clear. I hope you're still in the house 6422. If you are in the house, let me know. And if there's anything else you want me to explain as regards the XAGUSD, let me know right in the comment section. So on this note, I want to call it a day here. It has been a wonderful moment with you guys, and we were able to spot very interesting setups during the course of this live session today, and I'm very confident that we are ready to be able to take advantage of any potential opportunity during the New York session today, as we were able to simulate all the potential opportunities around the current market structures on all of the instruments that we are monitoring for today. So let's be on standby to catch any of these opportunities as we continue to monitor price action. 65756 says XAUUSD, please. I think we spoke about the XAUUSD about I think about 10-15 minutes ago. We discussed that. I can quickly review that for you if you had missed out on that one, and give you a summary of what we are looking out for on this chart. So here we are on the XAUUSD. Did I talk about the XAUUSD at all? Are you for real? Okay, so let's quickly run through the XAUUSD quickly before I call it a day here. I thought I talked about it. Okay, so on the XAUUSD, we have been profitable here so far. Remember, yesterday we acknowledged our price action has been ranging between the 1,947 and the 1,940 since the beginning of the week. We saw some couple of breaks out and some couple of breakdown too as well, which happens to be a false one at one point in time. But one thing we did here yesterday during our live session is that we are going to be anticipating a breakout of the 1,947 to give us a buy position. And in fact, we bought at that point, and price action moved significantly well in our favor, over 150 pips, before we started seeing this choppy situation going on here. And since price action got into the 1,960 level during the New York session yesterday, we have been noticing this choppy situation go on here. And this is a clear sign that there is a level of indecision in this market. And for the fact that this old indecision phase is going on around our key level for the week, that is the 1,960, we want to be very, very careful for an opportunity here. So our center of focus for today is going to be between the 1,960 and the 1,955. So this is where our center of focus is going to be for today. As you can see, price has been ranging within that area in the last 24 hours. So what we are going to be looking out for, you know how we do it. We want to see price action either break out of the resistance line to give us a buy opportunity, or break down the support line to give us a selling opportunity. And to capture a bullish momentum here, I already have a buy stop order above the $1,960 level to join any bullish momentum from this point. And the reason why I have this is that I've been seeing multiple attempts by the buyers to break out of the 1,960, and it has been successful at every point. We had an engulfing bullish candle here breaking out of that structure. We had one here at the beginning of the week. Then we also had one here during the early hours of today, giving me a clue that we might likely be seeing price action breakout of that structure. So we want to capture that move if it does, and have a stop loss anywhere close to the 1,955, which will be dovetailing to about 35 to 40 pips at that point. Then another scenario that we also want to take into consideration here is the potentials that sellers could come in. So if price action does not break out of the 1,960 and instead it drops below the 1,955, then at this point we want to be considering selling. And one more thing that shares a confluence with that 1,955 is this trend line we identified here. So I spotted this one here this morning after connecting the series of higher lows, giving me a beautiful trend line to monitor my bullish momentum in this market. Though we had the breakdown here yesterday, but we saw that price action immediately climbed above the trend line, and since then has remained above that structure to emphasize the level of buying pressure around this area. So if we are going to be selling, of course, we want to see price action break down the trend line to the downside, breach the trend line. Then at this point we want to see this as a sign that the trend line may no longer have the capacity to negate any bullish any bearish momentum here, and continued selling pressure will definitely give us an opportunity to add more sell position to our existing trade. Now, there is a caveat to this bearish expectation in this market, and that falls around the 1,947 and the 1,940 area, which is where price action started the week on a choppy note, remember. So if price action comes into that area, we want to move all stop losses on sell positions below the 1,955 to secure that one at that point, as depending on how price action reacts to the zone will now determine if we are going to be adding more sell positions to our existing trade or getting ready for another wave of bullish momentum. So this is how we are going to be trading the XAUUSD today. So let's be on standby to catch any of these potential opportunities as price action is being monitored. 65756, I was able to do justice to that. I hope you are still around, and if you have any questions, feel free to let me know in the comment section. So on this note, let's call it a day here, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well this instrument that we have been monitoring has been doing so far, and at the same time get ready for the New York session tomorrow. And remember, we have high impact event coming up tomorrow. We have the ADP employment change, we have the ISM manufacturing PMI, which is one event majority in the market we'll be looking forward to. So let's see how things plays out. We will be here tomorrow again, 10 a.m. UTC, 11 a.m. West African time, to review how well these pairs have been doing. Do have a wonderful evening. Miyagi, thank you very much, and wish you best of luck through the New York session. Bye-bye.